The week started with downwards momentum, but the time seems to be changing, and that's why I'm betting on these altcoins. And in this video, I'm going to explain why this market is going to reward us with strong returns and why I have these altcoins. Let's get started. The markets have seen some strength since Wednesday of this week. Ethereum started to go up, altcoins did even more. And that's why I've added one more altcoin into my portfolio, but we're going to discuss that later in this video. First, we're going to discuss the reason for the sudden change of momentum in the markets. And there were several arguments that have been taking place in the past 10 days that were an influence of the markets. And the first thing that took place was the crash that happened on Monday and actually during the weekend, which was not due to DeepSeek AI, but it was due to the fact that the Central Bank of Japan announced a rate hike that caused the markets to collapse. Why? The Japanese currency has fallen by 25% in the past 3 years, so a central bank needs to step in to avoid another devaluation of the currency and wants to strengthen their currency. And how do they do that? They do that through rate hikes, which has been happening. What has been the response? Markets have been tanking. Nasdaq has been tanking on Monday as well. And the reason for that is that the Japanese yen carry trade had another shock. If you go back in time, the Japanese yen carry trade was a trade where you borrow money in Japan and invest it into the US Treasury bonds or whatever you want to invest it in. It's a super simple one. And every time when there's a rate cut or rate hike taking place, especially with the Bank of Japan, then rebalancing takes place. And the first shock took place in July of 2024, where we have seen that the markets have seen a massive drop after the first rate hikes took place of the Bank of Japan, causing Ethereum to drop by 40%. This was the first drop, and now we've had the second drop, and this second drop is way less, as the impact of another rate hike is also less, and that's why we have seen that correction earlier in this week. Then, secondly, we had the Fed meeting on Wednesday taking place, which we were kind of expecting something to happen in terms of rate cuts or rate hikes, but that was a nothing burger. Jerome Powell didn't do anything in that sense, but crypto people got a nice surprise in which Jerome Powell stated something about Bitcoin. Let's watch what Jerome Powell has been mentioning.
Our role with Bitcoin really is to look at, with crypto, really is to look at the banks, and we think it's, banks are perfectly able to serve crypto customers as long as they understand and can manage the risks, and it's safe and soundness. A good number of our banks that we regulate and supervise do that.
So that means a sudden U-turn where probably the influence of Trump has been shown through what Jerome Powell has been saying. However, if banks start to do custody, then likely DeFi is going to come next. And that's what we're going to be discussing with Sergey Nazarov in our upcoming podcast. If you have any questions for Sergey, he's the CEO of Chainlink, make sure to leave them behind in the comments beneath. Well, finally, the third big event of this week took place, which is the advanced GDP. It's quite technical, but the advanced GDP is the first data point of GDP for the past quarter. There are three. Next month is going to be a revision of what we've seen with advanced. But why is this important? The importance is lying in the fact of the Fed outlook for 2025. And I've got it on the video here. It's a table which is a very complex one, but the essential parts are that we can see in the middle, we see a year that is 2025 in the corner of central tendency, where it shows the change in real GDP in percentages, the unemployment rate, and PCE inflation and core PCE inflation. These are the four prime variables for the Fed to make adjustments in their policy. And as you can see, for 2024, for every data point, the September projection was relatively positive, but all have been shifting. So in that sense, the September projection was 1.9 to 2.1% for the GDP has been revised to 2.4 to 2.5. Unemployment rate has been revised in a more positive manner. And also the PCE inflation has been revised upwards, where they expect that the economy stays stronger and inflation remains higher. Now, if you look at 2025, we can see that we've got a very small framework to work with, in the sense that the GDP is likely going to be between 1.8 to 2.2, and the unemployment rate is likely going to go up slightly. Now, here's the trick. We had the data coming in from GDP, advanced GDP, which was expected to be 2.7%, but as a result, the data showed 2.3%, which means that the last quarter of 2024 was way worse than the expectancy or the expectancy was for that particular quarter, which shows that there is a likelihood that the GDP for this year is going to be worse as well. And that shows that there is a likelihood that the unemployment rate isn't going to be between 4.2 to 4.5, but might be higher. So upcoming week, we're going to have unemployment data. And if any of those data points start to go out of that framework, it is a trigger for the Fed to start moving with their policy, aside from China and their domestic choices. But in this regard, my expectations for 2025 are that we're going to see way more coming from the Fed, especially since in 2022, the markets weren't expecting any rate cuts or hikes to happen, and we've seen the biggest rate hike in history. So I think that shows that the topic of inflation is probably not the most important topic at this point. I think the domestic growth and unemployment are going to be important. The Bank of Japan, the domestic markets in China are all going to be a big factor. And I think that we're going to see a lot of surprises coming in from the Fed for this year. But as a result, we've seen the markets going up, and we've seen that Ether against Bitcoin showed a minimal move. And we've seen that smaller altcoins had double-digit returns. And I think that is the trigger. And now we're going to discuss why and what's next and why am I betting on altcoins. Let's talk about my portfolio and why all this sort of macroeconomic fugazi is important. But why? Well, everything is linked together and the crypto markets are getting more complex. And that's because crypto is getting bigger. The markets are infiltrating into the normal asset classes through the fact that we have ETFs. So it becomes bigger, so other dynamics are taking into control. And in this case, macroeconomics are taking actual risk-taking into control. That's why you want to be in or out of altcoins, etc. And I think that the 4-year cycle is actually bullshit. And I also think that, or we have seen the longest bear market ever, especially if you look at Ether against Bitcoin, we have seen 3.5 years of downwards momentum. There is irrational negativity surrounding utility coins at this point, and there was irrational euphoria surrounding meme coins, of which meme coins have been a big topic, and they will be, but it's a very likely case that we see a rotation of money happening, and that's why I wanted to bring up some charts to show that to you, that there are some interesting correlations taking place in the markets, that you need to understand why I am betting on specific altcoins. And the first chart that we have here is the chart of Ether against Bitcoin against the 10-year yield, which, as you can see, as long as the yields are going up, we technically, and you can also print a dollar on top of this, by the way, but as long as this takes place, we have been in a bear market. So you can see that we had the actual real breakout taking place of the yields at the peak of Ether against Bitcoin. We can also see the exact same when it comes to the dollar. But there's more interesting parts here, which is if you look at the Japanese yen, for instance, then you can see that in periods of strength of the Japanese yen, that's the period where Ethereum against Bitcoin does well too. And when it starts to fall, that's a period where you don't really want to be into the actual asset. So this is an interesting case where we've seen some strength, and also from the actual collapse, we can see that the Japanese yen against the dollar wasn't really performing. So technically you can start making a scenario where if the dollar continues to show strength, there's no real reason to be into Ethereum. And that is also what we can see from several other charts that are very important to watch. In this case, we've got the treasury bonds divided by the consumer price index connected with the inflation or adjusted for the inflation, where you can see that the treasury bond prices and the returns on them have literally cascaded. And if you draw a line on the markets of Ethereum and the momentum of the altcoins, then you can see that when this is continuing to fall, then there's no real interest into altcoins at this point. And when this rotates, which means that the rates are going down, the underlying collateral goes up, and the revenue that people make by having these treasury bonds goes up too. That is usually a period where people want to have altcoins or want to take more risk. And if we look at this chart, we can see that we're currently having a bottoming procedure where it's very likely that from here on, the treasury bonds are going to go up, which means that the yields are going to go down. And that is a key trigger for the markets to go into the actual altcoins, because that has been shown as an actual argument, and we've got the final argumentation here. I think it's better than watching social media. And from that perspective, you need to decide which altcoins do I really want to have. I think that if we look at the institutional interest, and if we look at TradFi jumping into DeFi, RWA, all those things, it looks very standard to go for the Ether ecosystem. So that's why I'm betting on them. I expect them to do really well. And not only on the macroeconomic side, I see all these signals, we also see them on the altcoins. And that's what we're going to discuss next. Which altcoins do I have? To remind you, I've got 4 bigger ones and 4 smaller ones. The bigger ones are Optimism, Celestia, BitTensor, and Sai. The smaller ones are Renzo, Omni, Rocket Pool, and Aevo. You can see that they are all connected with each other because either they are AI or they are a layer 2 on Ethereum, or they do something in DeFi, or they do restaking. It's all connected, and it's a heavy bet to take. But to add on top of that, I've added one more coin, which I think is looking really great when it comes to the technical analysis on them. And it's also connected with the rest of the coins that I have in my portfolio, which is Wormhole. So when we look at the charts, Wormholes, by the way, is one of those assets that you need to have to bridge. And I think that interoperability is going to be such a big topic between chains that you really want to have a product that maybe you don't want to be using, or you won't be using that much, or you're going to be using it without knowing that you're using it. And that's when something like Wormhole or, for instance, Chainlink comes into play. So when we look at the charts, we can see that Optimism has been completely destroyed. Against Bitcoin, it is making a cycle low, and it's actually the lowest point since the chart started. So that says a lot. But there is a potential case that we're creating a massive bullish divergence here, indicating that the markets are going to reverse. When we look at Optimism against USDT, we can see that we have been having a substantial crash due to the Japanese yen carry trade taking place. And we are back in the accumulation in which we have been acting since July. So there's not much that has changed here. I'm still down on this one, by the way. But there's not much that changed here. But when you look at the other altcoins, we can see that something is really turning around. In the case that, for instance, for Wormhole, we have a structure that is currently called a falling wedge. But we have a massive bullish divergence since the summer, indicating that the markets are likely undervaluing the asset, as the indicator already shows that we're currently looking to get some more upside going. That is a very likely case. Of course, it's still not proven. What we need is to have a new higher high, which is already a 2x for Wormhole. But knowing that I understand the macroeconomics and seeing this in the chart, I really want to fancy having positions into this one. Then finally, when we look at the USDT chart, we can see that we are still accumulating with Wormhole. There is a lot of upside to come. And when we look at identical charts, we can see that Omni has the exact same. A potential bullish divergence indicating that we're going to have a reversal taking place. But that reversal needs to come in the next 1 to 2 weeks, otherwise it's completely invalidated. But I wanted to show you an example of a chart that has been providing the exact same identical structure, which is SUI. SUI has been doing this from the start, from the listing, has been making a massive bullish divergence and ran up again, just like it did in the previous correction during the summer. It started to run again. I think that SUI isn't really the best one to jump into right now, as it just went up 500% against Bitcoin. But overall, I think that the chart and the TA shows that Ether altcoins are the ones to have. From a macroeconomic perspective, I think a lot of tables are going to turn. So it's going to be a great period. And that's why I'm betting on these altcoins. Thank you very much for watching to this update. I'll be back on Thursday and there's going to be some unique content. So make sure to subscribe to this YouTube channel. I'll see you again. Ciao.